Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hi everyone, and welcome to another episode of ADMAIL. I'm Adam Bergman, tax attorney and founder of IRA Financial. On today's episode, three really good questions involving various topics of self-directed retirement plans. One involving gifting a contribution for a self-directed IRA, or just gifting an IRA contribution. Can you do it? Another question on whether a sole proprietor can set up a solo 401k in 22 and still make contributions in 23. And then the third and final question on today's podcast is about reversing Roth conversions. Is that possible? If you elect to do a Roth conversion, can you just get out of jail if the asset drops in value? And we'll find out soon enough. So without further ado, let's get started. First question is from John M. of Plano, Texas. John wants to know, I want to make an IRA contribution, a gift for an adult child. Can I do it? So great question, John. I get this a lot, where parents, grandparents basically say, hey, I have a grandchild or child. They work. It's not able to save enough for retirement. Can I just give them the money or make a contribution for them in their IRA? So the answer is kind of yes and no. You can't just open an IRA like a 529 plan for your kids. So no, but what you can do is just gift them $5,000 or $6,000 or $6,500, and then so long as they have enough earned income, they can either do an IRA or a Roth IRA. So as long as the money comes from their bank account, and as long as they've earned enough income, so they need income of at least $6,500 or so, if that's what they are trying to do from a maximum contribution standpoint, which is in 2023, $6,500 or $7,500 if one is over 50. So long as they have enough income, earned income, not passive income like capital gains, interest, dividends, royalties, rental income, but earned income like compensation for services, you can literally just gift them the $5,000-6,000, and then they can just deposit it into a pre-tax IRA or Roth IRA. So to answer your question, John, you can't just open an IRA for your kid. They would have to open it, assuming they're 18, and have earned income, but you can just literally gift them the money, and you can Zelle them or Venmo them the money, and then they can just write a check or wire the money to an IRA each year. So indirectly, you can gift a child money and they can make an IRA contribution. You just can't send the money to the IRA for them. So good point. I'm surprised more people don't do this. I feel like every grandparent, if you can, whether it's 529, put money in a Roth, dude. Just literally gift the kid the money and say, hey, so long as they have earned income. Obviously, if the kid is 4 years old or 7 and doesn't work, you can't open a Roth IRA for them. But let's say someone's 15 or 20 or 25 and they're just like, hey, I need some help. I'm doing okay. I'm starting off in my career. I just don't have $5,000 or $6,000 lying around to save in an IRA. Maybe a parent or grandparent could simply gift them the money and have that money just go in a Roth IRA. That's kind of a neat way of helping out a child. Yeah, they can't use it immediately, but it's kind of a great way to watch your funds grow without tax, and hopefully, do that for 5-6 years, $5,000 at $25,000 in contributions. In 20 years, maybe it's worth $150,000, right? And really has an impact on their lives. So pretty cool idea, John, and thanks for the question. Second question is from Ingrid F. of Clearwater, Florida. Ingrid wants to know, I'm a sole proprietor and set up a solo K in 2022. Can I still make contributions in 23 for 22? The answer is yeah. You were smart, Ingrid. You set up your plan in 22. Because you set up your solo K in 22, you are able to make employee deferral contributions, which is $20,500 or $27,000 if you're over 50, up until you file your 1040, April 15th or October 15th, including extensions. So yes, you can make contributions in 23 for the 22 taxable year because you set up your plan in 22. If you have set up instead, if you set up your plan, procrastinated, and set up in 23, you would not be able to do employee deferrals for 22. All you would be able to do is the 20% employer profit sharing based off your net Schedule C. The maximum you can do is 61,000 or 67,500 if you're over 50. But if you set up your plan in 23, you would be relegated to just doing the 20% of your comp. But because you set up your plan in 22, you can do the employee deferrals dollar for dollar of either 20,500 or 27,000 if you're over 50, plus the 20% of your comp, allowing you to put away a lot more, all because you didn't procrastinate and set up your plan in 22. So hope that was helpful, Ingrid, but kudos to you for getting things going. I can't tell you how many people I talked to in January and February. They're just like, Adam, I wanted to do it. I got lazy. I procrastinated. I went on vacation, New Year's, Christmas, Thanksgiving, and just like, hey, listen, I can't, backdate your plan. It's tough. I'm sorry. You just lost that potential deduction of, either 20,500 or even higher if you're over 50. It's a raw deal. All they need to do is kind of just go on our app, and literally it takes 4 minutes to set up a plan. You don't have to put any money in it. You just got to set up the plan. So kudos to you, Ingrid, for getting that done. Third and final question on today's episode. I told you these are good and they're quick, and you get your answers, and no messing around. So if I do a Roth conversion in 2023, can I reverse the conversion prior to 12/31? The answer, unfortunately, is no. Before 2020, you were able to reverse conversions. So what does a reverse conversion mean? Well, let's say in February, you do a Roth conversion on Bitcoin at 50,000, and in November, it's worth 15,000 or 16,000. And you're like, I don't feel like paying tax at a $50,000 valuation when the asset's only worth 15. Let me just scrap it and reverse it. Unfortunately, they got rid of the rules that basically said you can do that. And now if you do a Roth conversion, it's essentially locked in. You can't unwind it. So be careful, right? Think long-term, make sure you can pay the tax, make sure you have faith that what you're converting is actually at the value you want to convert it at. Obviously, no one knows, right? You always can play Monday morning quarterback. Who would expected Tesla to be down 70% this year? Who would have expected, some Microsoft to be down 30% or Bitcoin to be down 65%? Like, no one could see this coming, or maybe some. I didn't. So you don't always get it right, and that's the risk of doing a conversion. Is sometimes you get it wrong, right? Always use the example of Enron or Bear Stearns or Lehman. You converted those shares at a high value, then the companies go bust. You just gave Uncle Sam tax for no reason, right? If you just kept the investment in your IRA and it went to zero, okay, you lost the money, but you wouldn't have paid tax on that. But here you actually paid the tax. You didn't just lose the money, you actually paid the tax. So on that asset that's worthless. So just be careful. Obviously, I'll say it again. You want to be able to afford the tax on the conversion. You want to make sure that you're a patient person, because generally you got to wait till you're 59 and a half. The Roth's been open at least 5 years to pull the money out tax-free. You want to have trust and faith in what you're doing. Do you believe in Bitcoin? Do you believe in Tesla? Do you believe in Apple? Or the real estate you're converting, or the private equity fund? So be careful. And then obviously think about what your tax bracket will be when you retire, right? When you're 72, 73, and you have to take RMDs, are you going to be in a low tax bracket? You're going to be in a high tax bracket. Clearly, if you're in a higher tax bracket, Roth conversions have more value, since if you did a pre-tax IRA, you'd have to pull distributions out and pay tax at that tax rate. Whereas if your tax rate was low, then pulling money out when you needed it wouldn't be a big deal, because you can maintain a relatively low tax rate. So there's unfortunately no guarantee, right? You can kind of stick to a plan, be thoughtful, but things happen, right? You think Tesla is the best stock, and who would have thought it would lose 70% of value in 1 year? But as long as you're a long-term thinker and you have patience and faith in what you're doing, that asset price hopefully will come back, and you'll be in positive territory, just over years. It's just paper losses, right? So long as you're not selling that asset or pulling the money out, it's just paper losses. So you just need to continue to be patient until that asset, grows back in value, hopefully exceeding the value of what you converted at. So thank you for spending some time with me today. That's another ADMAIL in the bag. Hope 2023 is going great. Definitely, keep coming back. It's a great podcast. I learn from you. I'm getting great questions. If you have questions, send them in, info@IRA Financial. You can drop a question on our YouTube channel, in the comment section. Subscribe definitely to our amazing YouTube channel where we drop 3 or 4 videos a week, 3 podcasts. If you rather look at me than listen to me, you can do that on our YouTube channel. If you just want to listen, that's cool too. You can do that on Spotify, Apple, SoundCloud, wherever you pick up your podcasts. This is again, weekly podcast that drops every Thursday. So it's one of my favorites because I get some amazing questions from some super smart folks, which makes me smarter because I actually prepare. Yeah, I prepare for this stuff. So it's a lot of fun and I learn from you and hopefully you learn some stuff from me and it's a win-win. So have an amazing day and I'll see everyone again next Thursday. Take care and have a great day.